Welcome to this explainer of Mark Douglas's absolute classic Trading in the Zone. Think of me as your tough but empathetic trading coach for the next few minutes. We're going to completely reconstruct how you look at the market. We'll be breaking down those exact mental blocks that are, frankly, destroying your trades, and we'll give you the tools to finally achieve consistent profitability. Let's get right into it.
I want to hook you immediately with a pretty brutal paradox. Why do highly accomplished, insanely smart professionals, doctors, lawyers, CEOs, engineers, routinely get completely crushed in the financial markets? I mean, these are literally some of society's brightest minds, right? But the second they put on a trade, they just fall apart.
And the result of that paradox leads us to a genuinely staggering statistic. 95% of futures and stock traders lose absolutely all their money in their first year. Just let that reality sink in for a second. 95%. It really proves that raw intelligence and hard work, the exact same things that practically guarantee success in almost every other walk of life, are simply not enough here.
So, here is our roadmap to fix this. First, we'll look at the 95% failure rate. Second, the trap of analysis. Third, emotional pain. Fourth, the 5 truths. And finally, number 5, entering the zone. All right, section 1, the 95% failure rate. Okay, let's dive into this and take a hard look at the first phase of a trader's evolution and really uncover why the vast majority just never survive it.
See, the very skills that earn you high marks in school and advance your corporate career are completely destructive in the market. Think about it. In the real world, we learn to manipulate our social environments to get exactly what we want. We exert control. But the market is this boundaryless, entirely untamed beast. It doesn't know you, it doesn't care about you, and it absolutely does not respond to your attempts to control it. To actually survive, you have to acquire a completely foreign mindset, one that completely surrenders the need for control.
Which brings us to section 2, the trap of market analysis. Because once a trader realizes they can't control the market, they usually evolve into what we call the intermediate stage. And right here, they run straight into a very natural but deeply flawed instinct, trying to avoid losses by overanalyzing the market.
And this perfectly illustrates the trap we fall into. On one side, we have fundamental and technical analysis. Traders fall into this massive black hole of analysis, truly believing that if they just learn, one more indicator or read one more earnings report, they can crack the code, predict the market, and just never lose again. But listen, that's just a disguised attempt at control. Now, on the flip side, that is where the 5% live, mental analysis. The best traders out there, they shift their focus entirely away from trying to control the market, and they pour all that effort into controlling their own psychology.
Moving on to section 3, the threat of emotional pain. So you might be wondering, why is it so incredibly hard to control our own minds? Well, it's because of the psychological pitfalls and natural human instincts that are actively, and I mean actively, working to sabotage us every single time we click buy or sell.
In fact, 95% of all trading errors stem from just 4 primary fears: the fear of being wrong, the fear of losing money, missing out, and leaving money on the table. Think about your last really bad trade. I guarantee you, for sure, one of these fears was driving the bus. These fears cause us to freeze up when we should execute, jump the gun way before a signal is confirmed, or, we've all been there, exit a massive winning trade way too early just to lock in some tiny profit. Fear literally narrows our focus and completely blocks out rational information.
We really have to internalize this idea. The market isn't out to get you. It is entirely neutral. It simply generates upticks and downticks. That's it. Any emotional pain you're feeling, it isn't coming from the market, it's coming from your own expectations being crushed. We have to stop blaming the market right now and start taking 100% complete responsibility for our own interpretations.
A huge part of this emotional problem actually comes from how our brains are wired. Think about those classic scientific studies on monkeys. If you train a monkey with a consistent reward and then suddenly stop giving it, the monkey quickly quits the task. Makes sense, right? But if you reward that monkey randomly and then stop, the monkey will just keep pulling that lever indefinitely. It gets totally addicted to that unexpected dopamine hit. Well, new traders often start out with a random winning streak that requires 0 actual skill, and boom, they get addicted to undisciplined, random trading because they're endlessly chasing that original euphoric high.
So that takes us to section 4, the 5 fundamental truths. The absolutely crucial point here is, how do we break this addiction to random rewards and strip all that fear out of our trading?
Well, we do it by completely shifting our paradigm to think in probabilities. And to do that, you have to accept the 5 fundamental truths. Truth number 1, anything can happen. Let me say that again. Anything can happen. There are always unknown forces operating in the market. Seriously, it only takes one unknown trader somewhere in the world with enough capital to completely negate your edge. If you truly accept this, you will never trade without a stop loss again, because you'll fully accept that your perfectly drawn, beautiful chart setup could be destroyed in seconds. Truth number 2, you do not need to know what's going to happen next to make money. I see so many people struggle with this. Trying to predict the future is a massive trap, and it's based entirely on the fear of being wrong. Listen to me on this one. You aren't a fortune teller. You are a probability manager. Truth number 3. There is a random distribution between wins and losses for any given edge. This means even if you have a system that wins, say, 70% of the time, you have absolutely no idea which 3 out of those 10 trades will be the losers. If you truly, deeply believe this, a losing trade won't cause you any emotional pain. It just puts you statistically one step closer to your next win.
Truth number 4, an edge is literally just a higher probability of one thing happening over another. That's it. It's not a guarantee. We have to strip away all that emotional weight and all those heavy expectations we attach to our trade setups. It's really just a coin that's slightly weighted in your favor.
And truth number 5, every moment in the market is unique. Now, what's really fascinating about this concept is how it acts like a mental shield. It forces you to disassociate today's trade from past painful losses. Look, just because today's setup looks exactly like the one that cost you $1,000 last week doesn't mean it's the same. The players are different, the money is different, the moment is entirely unique.
All right, Section 5, entering the zone. Once you actually integrate these 5 truths into your core belief system, you reach the final professional stage of a trader. You enter the zone. So what is the zone? It's this carefree state of mind where your mind and the market are just perfectly in sync. You act instinctively, without fear, without hesitation, and with zero internal conflict. Think of an elite athlete operating in a flow state. You can't force yourself into the zone. No way. But you can set up the exact mental conditions to enter it by fully accepting the risks and just completely dropping your expectations.
Let's look at the mechanical stage and see how this builds into a really concrete, actionable framework for your very next trading session. First, you have to build self-trust by actually doing what you say you're going to do. Second, flawlessly execute your system with incredibly strict entry and exit rules. Third, force your mind to think in probabilities using those 5 truths we just covered. And fourth, build an absolute, unshakable belief in your own consistency. The market is just an endless stream of opportunities. It is ready to give you whatever you have the mental discipline to take from it. So I'm going to leave you with this one question. Are you ready to stop endlessly analyzing the market and finally start analyzing your mind? Because the consistency you're looking for, it isn't on your charts, it's in your head.